Good evening, everybody. It's John Seville from Acorn Wealth, and this is your executive summary for stock setups for tomorrow, Wednesday, March 15th. Now, having a look at the market, as we said over the last few executive summaries, we're expecting the market to go sideways, if not challenge the open range resistance at 2380. That's exactly what's happened. We bounced off of the moving average on Thursday, Friday, like we thought we might. Again, the rally's been lackluster. Doesn't mean it couldn't go higher from here, but certainly there's no real big bullish signs at the moment. Now, we got quadruple witching hour on Friday, as well open range to the downside. That bias ends at the end of market close on Thursday. Open range then resets on Friday. So there's a lot going on. We got Janet Yellen, the FOMC, oil's crashing at the moment, and open range resets, so that negative bias is out the window and a new bias begins on Friday. This bias is particularly valuable because we actually have 2 full weeks of market action after the bias is set on Friday. Normally, the open range of options expiration, it doesn't last that long because it usually falls on the second last week of the month. This obviously is a bit different. So what we're looking for is a whole lot of stuff happening in the next few days, and most importantly, that open range resetting on Friday. So there's not a lot of advantage in getting really crazy in one direction or the other, because we've only got 2 days left of market action where we know what direction probability is taking us. So, in other words, I would be mostly sitting tight here and letting things pan out. This is definitely the time I would suggest considering taking some profit on positions that have done really well for you. If you have options that are up 3 digits, 2 digits, 3 digits, or what in the high numbers, nothing wrong with taking your original capital out and leaving your profit in. If you've got stock positions, nothing wrong with updating the stop loss to protect where you're at, or even just taking some profit off the table, because we are going into an uncertain end of the week, and then we don't want to miss our opportunity to clench some good returns. Now, going into looking at what's next, as I've been talking about in the last few summaries, we've got a lot of divergence. Now, the market may have been going sideways after a big upward spurt at the beginning of the month, but the corporate high yield bonds have been plunging straight down. We talked about our target on the high yield bonds being $86 and change, where the 200-day moving average was. You can see we've now broken down from that upward channel to exactly that point. So as open range to the downside comes to an end, we also find that the corporate high yield bonds pattern comes to an end of its cycle, now reaching its target. So there's an opportunity here for it to either plunge further or rally up. But that certainly so far, that has been a big downward push, definitely divergent from market direction. So that's saying bearish signal has definitely been in place for the last couple of weeks. The other thing is stocks above their 50-day moving average in the S&P 500 has declined now from 66% back in February 15th, now down to 46%. So basically only 46.43% of stocks in the S&P 500 are actually above one of their most important support levels, being 50-day moving average. So over half have broken key support. That's an interesting fact to know, because this indicator, as well as high yield bonds, have almost always diverged before a big market correction or collapse, and we're seeing both of those do that now. So why is the 50-day so important? Because basically this represents the institutional investors. It represents smart money. High-frequency traders, short-term traders, day traders, swing traders. We all look at the short-term stuff. We look at the 9-day, the 5-day, the 20-day. But the further up you get to the 50, the 100, the 150, and 200, that's when you start to represent the bigger money, the Titanic money that doesn't jump in and out as quickly because it takes longer to turn. Now, And that's what we're starting to see here, is that the 50-day moving average represents where if smart money was believing in a rally, they would normally buy when a stock pulls back to the 50-day moving average. That's their entry point. That's the support they look at. But if instead of buying, these stocks are hitting the 50-day moving average and just going right through it, as we're seeing here, represented since the beginning of January, going from 80% all the way down to now 46%, when apparently the market's going up and stocks in the market are not, that is an interesting divergence that you'd want to look at. So pretty interesting stuff, and these type of smart money indicators are very valuable in helping you to say what's really happening without having to read through all the garbage that people are saying and just concentrate purely on what people are doing. And by people I mean smart money. We will be holding a smart money complimentary webinar tomorrow night, which you'll get the invitation to at the end of tonight's recording. But you can enroll in that just by going to acornwealthcorp.com/event. We're going to be talking about all of this stuff in a lot of depth. But let's move on. Firstly, a quick review from the stock we suggested last night, Finisar. We were looking for a breakdown below this 200-day moving average, below the low of yesterday's support. We went straight through that today. So again, beautiful double top breakdown. We're looking at this target of around $18 to $20. 20 would be the first, $20.13 is the first target, but we could very easily fall all the way down to 18. So this one's looking great. And we also discussed in Trading Room tonight, as an option play, you could look at the June $26 puts, which are currently $2.15. So if we get a nice $6-7 drop, that would obviously be a very healthy return if that does drop. But obviously be very careful. Options are very risky, so you need to know what you're doing. But that's just one idea to have a look at. But so far that stock setup is doing really well and strongly breaking through that 200-day potential support, which is no longer. You can also see it retested the resistance today and failed to break through on the intraday action, which also reinforces the strength of this holding it down. So that's really good. Let's also look down at PGRE, also from last night. This had a lovely drop today, breaking through its support and closing right at the bottom of the range. So money flow just about to break through zero. So this also looking pretty solid to decline towards its $15.20 target. Okay. Now let's move on. REG. This is one of our recent short setups from the executive summary. This is obviously, it ran down towards 62, where we suggested would be a potential short-term profit-taking target, just as we were reaching very close to the 61.13 target, and we're starting to get a little bit of support in the market. So whether you took some profit there or not, you can see we've rallied up, although it has been on weaker volume. 3.22 million on Monday. 2.61 today, and where we're rallying up into is the key resistance area for this. The reason that's the case is because this was where the upward channel's target was. Upward channel breaks down, we duplicate the measurement, and we get right to there. So that then becomes key resistance or support. Because we broke below it, it becomes resistance. We've rallied up, and this is also where the 9-day moving average is now. So we are approaching two levels of resistance on weakening volume. We may get a little bit of a blip through it as an intraday high, but this is essentially what we need to close below. If we close above this tomorrow, or towards the end of the market, it's looking that way, then I would suggest it's probably time to just get out of it completely. But that's one. Obviously, it's got a very good drop so far. One of those situations what I'm talking about earlier, where you don't want to let unnecessary losses deplete the profits you've made so far. Okay, so now let's move on to the next one. NVIDIA. Now, NVIDIA's been a great performer to the downside. I do have a couple of new ones for you tonight, so stick around. NVIDIA, however, just another review of that original short setup back at 120. It's had a great drop now down to 95 and back up now to 100. 100 was one of our short-term profit-taking targets. So if you're in the options or even in the stock would have done you 20% if you're in that from 120 down. So nothing wrong with, again, taking some profit off the table. However, I'm not too concerned concern yet with Nvidia in its recent rally, because if we go to the short-term chart and have a look at the hourly setup, you'll see that Nvidia is still oscillating back and forth in an upward channel, and upward channels are meant to break down. So as long as we stay below this 105.50, even 107 and change, these two areas should really hold this down. I'd be surprised if it broke through, but if it did, then that would be a time that I would consider just taking your profit and running. So there's one. And last on the reviews, SLCA are absolutely awesome. I mean, this is this was, of course, we were looking for that breakdown just a few days ago. Here we go. Yeah, so we were waiting for a breakdown below 50. The options now are up from June 25 puts, 55 puts, sorry, are up from 590 now to 1230, up from 590 to 1230. Looks like it's going further, but again, nothing wrong with taking your original capital out there. It's up over 100% in terms of the option movement. So again, just it has closed in the bottom half of the range. This is a sharp rally we had here. Doesn't seem to be threatening it as much now the second time around. Doesn't mean we won't get a bit of a push up, but again, that's why you could consider taking some profit here, but it does look like it's probably going to be going further. Okay, now in terms of before we get to the new ones, we'll go quickly review the long one, EDIT. Beautiful. This was from last night's summary. We said we're looking for a break above yesterday's close. It opened there at 26.73, triggering that condition, went straight up and hit its first target at 28.37. That's the beauty of trading with targets, is you don't even have to be in front of the computer. You could have programmed all of that type of thing in last night, and you would have had a beautiful day trade, which would have pulled you back 6-7%, being nowhere near the computer as those day trades executed for you. And that's the beauty about knowing what you're doing. You can pre-program things to do it for you. Awesome movement on EDIT. I hope you're able to get some value out of that alert last night. Okay, so that is that's the summary of the review. Now let's go over to the new ones. Firstly, on the long side, CMCM, Cheetah Mobile, may be making a burst forward. It came up on the flag scan, and we've got some very bullish activity here. Pulled back to support from the top Bollinger Band today and just went straight up off of it. So this is possibly a flag formation. We'll go into the hourly chart, and you can see that a little bit more clearly. So I think here on this setup, we're going to be looking for, at the very least, a continuation of this type of flag. So, but this could actually be a longer-term flag all the way back to the beginning. So it's something that has kind of at least the potential, I think, of getting up here to 1433. So my the first target I would therefore put between 1420 in that zone. So that would be the exit zone. I'd be looking at 14 to 1420 as a target. Second zone, I'd be looking at 15 to 1513. Okay, so two different exit zones depending on how much steam it gets. Now, as a stop signal, I'd look at 1247. Let's have a look here. No, sorry, 1243 as a stop signal, and I would just and I increase, and I look at the entry signal of what's the high here, 1279. So I'd be looking for it to break 1293. So look at a stop signal of 1243. I'd look at an entry signal of 1293, and that gives us a nice, decent risk reward, at least to the first target, but obviously even better to the second target. Obviously, there's the potential for it to stop out. It is a very volatile stock, but most importantly is risk reward. So there we have it. And with so many others of the flags and so forth just performing so well, I mean, you go into every trade focusing on the rules, and that's what should keep you secure. All right, now VSIT was also one of our recent, VCIT was one of our recent ones. And it might not look like much on a daily chart, but it's the weekly chart that actually really looks attractive here. And as you can see on the weekly chart, we have a long-term upward channel all the way back to 2013 that is just breaking down now. So as you can see, that would give us a target down here of around 79.38, which is about a 7% move. But nothing wrong with that if it's relatively easy to do. And I do like this one. So it's been on our watch list for a while. I'd be looking for a break of 84.83. I'd look at 79.73 as the target. And I'd consider a stop criteria of 86.13 as a stop signal. Okay, now next on the list is Target. Now this is a very speculative one, and again, always whenever you're dealing with high risk situations, always consider what you're willing to risk. That's not what we're here to tell you. That's something that you have to do yourself. But Target is a potentially high risk, high reward possible play. We talked about considering the July $45 puts, which are currently around 45 cents, I believe, and the reason being is that there's a great upward channel that appears to be breaking down, or has broken down. That gives a target down here of 46 or 45. And then the other thing is, if we go to the daily chart, you can see that there's a downtrend line here. It's been forming over in 2015, and that target comes in around 44, 45 as well. Now we have, if we break through any lower than today's close, as you can see, that also breaks through all kinds of support that was holding it up before, and there we go. So if we just zoom in a little bit now, you can see we're just breaking down. So if we break the low here of 54.35, then those 54.35, then that could have a nice drop at a first target here of 45 and change. Now, these are way out of the money, so I mean, this is something that personally my approach is, I wouldn't want to risk more than 2% of my capital in a trade like this. So let's say you're dealing with a $10,000 account. This is the kind of thing I personally wouldn't consider risking more than $200 in. But but the upside is, a 5 or 10 bagger if it really plummets. So you don't have to risk a lot to make a lot, but this is often how people blow up accounts, is by putting too much into very high risk situations. Again, we're not here to suggest or give you any financial advice as to what's right for you, but just do be aware of the risks that a trade like this, and any option trade, you do stand to lose all of your money if it goes quickly the wrong direction, especially with out of the money type of strike prices. But high risk but high reward potential set up there with those July $45 puts. And last but not least, PLNT. This is Planet Fitness. And as you can see, money flow's gone right out the back door after long-term divergence over the course of the last almost 12 months, and is now breaking through all of its moving averages and its trend line support. So I would be looking at a break below the low of today. So let's say 1983, and I would be looking at a stop signal at 21.13, and this could easily reach 17.13 as you can see where that previous sharp reversal occurred from. That's kind of the fingerprint of smart money. So I'd be very cautious of that, and would certainly be looking to consider taking some profit there. And that, as you can see, is an atom bottom, so straight down, straight up, which is high frequency trading types of fingerprints. So there you have it. That's a little bit longer than normal summary, but there is lots to talk about. So certainly we'll hope that you join me tomorrow night in the Smart Money Workshop. It's 8:15 p.m. Eastern. And all you got to do is just punch in that address that you see popping up on your screen. You simply go to acornwealthcorp.com/event. It is an event you don't want to miss. There is some huge divergences going on, and possibly one of the biggest short setups and most powerful short patterns appearing on the S&P 500 right now. So we could be within days or weeks, possibly, or I should say weeks or days, possibly, away from some significant events. So not to be missed, acornwealthcorp.com/event, and we'll see you all tomorrow night. Have a wonderful evening and happy trading.